Introducing the best trading view indicator for scalping, the 5-minute time frame. This indicator is so powerful that it can predict market movements with up to 96.8% accuracy. All right, guys. Well, in this video, I'm going to show you guys how to set up this chart on TradingView, give you entry rules for the trades, where to set up your stop loss, and how to take profit just to maximize your trades, right? And make sure you watch till the end, because I'm going to also show you how to set up alerts on here. So every time there's a buy or sell signal, you get alerted and you're not having to watch the trades all day long. So yeah, let's get right into it. So when you get into TradingView, your chart's not going to look like this. So let me X out. All right, this is what your chart's going to look like. Okay. So the first thing we're going to do is we're going to change the candles to Heikin-Ashi candles. All right. And then we're going to add a couple of indicators to this. So go into indicator and type in chandelier exit. All right, by Everget. This is the one that you're going to use. All right, the one with Everget. And then we're going to make some changes to this. So click on the settings right here. And then in the inputs, we're going to change the ATR period to 1. And we're going to change the ATR multiplier. We're going to change that to 2. And then under styles, we're going to uncheck everything except for the buy and sell label, okay? So we're going to stop that. All right, much cleaner. And over here for the buy label, because you know it's still a little far off, especially depending on where it is. I like to move these closer in. So for the buy label, we're going to do it below the bar. So you see how that moved right there. And then over here for the sell label, we're going to do it right above the bar. So this way it's closer while you're looking. It's a lot cleaner looking. All right. So that's the first indicator. Then for confirmation and for entry rules, we need to add another indicator. And this is called the ZL-SMA. All right, the zero lag SMA. So this is the one by Verifid. We're going to add this one. All right, and then we're going to make some changes to that as well. Let's go into settings, input, the length we're going to change to 50, and style. I like that line to be white, so I'm just going to change that color to white. Click OK, and now you're good to go. Now, what exactly is the strategy? What are the rules? What do you need to do, right? So I'm going to put on here, I'm going to give you guys specific instructions. And again, I have to put this in all of my videos, right? None of this is financial advice. This is all for educational information purposes only, all right? So let me start like a little text box so I can give you guys some rules. So when you're looking for a long position, right? When you're looking for a long position on here, first thing you need to do is you want to make sure that you've got the buy signal. Okay. So once you get the buy signal, you want the price action to be above the moving average, which in this case is the white line. Okay. And then you're going to set your stop loss below, man, I can't type, below the swing low. All right, so let me show you guys what I mean. All right, so for a long position, like right here, first you get the signal, you make sure that the price action is above this white line, and then you'd set your stop loss below the swing low. Okay, now you're gonna be like, okay, well, where do you take profits? How do you exit, right? So you exit when the price action crosses the white line. So this is still going on. This trade would still be going on. This does not mean, because these are Heikin-Ashi candles, right? You want this to completely pass, like something like this, right? So if this was a sell signal, you get in, and when it crosses over that's when you would get out. So this trade would still be active. All right. So right now, just to kind of get an idea, because this is kind of happening live right now on the 5-minute chart on the Euro JPY. So for this example, like I'm doing this on forex stuff, but this works great on crypto, forex, stocks, you know, anything that has price action. So let's take a look at, if you kind of wait for this candle to close, you get in, you put your stop loss at the swing low right here, or even this swing low. So far this trade, and keeps moving, right? Yeah, so far, you know, so far it's doing pretty well. So far it's already at a 2.27 to 1 risk to reward. So the thing is, on these kind of trades, I don't like to put a specific risk to reward ratio, because sometimes you're going to have some big moves, so you want to capitalize on them. So when the price action, like here, this would be an exit point, because once this candle closes would be an exit point, because the price action right now has crossed over the white line. All right, now let's look at short positions. Right, for example, this would be a good short position sale. So on this, let's open up another one so you guys have these notes. Where did it? Oh, there we go. All right. So now on the short position, first you wait for the sell signal. 2, price action has to be below the moving average, all right, which is in this case the white line. And then stop loss is above the swing, the latest swing high. All right. And again, exit to take profit would be when the price action crosses the white line. All right. So you guys have all of these notes. You guys can make notes of these and stuff like that if you want. All right. So now let's kind of like go back and take a look at some of these, right? So this is happening live. So let's just go back. So yeah, this would definitely be a good exit point. So not bad, right? Buy right here, exit right there. I feel like that's a pretty good trade for the 5-minute scalping strategy. So again, it called out for the sell signal. Price action is below. Pretty good. Kind of like get out when it crosses over, right? This one is a little bit iffy because the price action is not completely over the white line, above the white line, right? It still would have made a little bit of a profit, but this wouldn't have been an ideal situation for a trade, okay? And then again, lots of consolidation. Here's another good sell signal, right? Where price action is below the white line, you get a sell signal, take it and exit right there when it crosses over. Right here again, price action, it calls for a buy signal. Price action is above the white line when you get in on the second candle, right? And then you exit when it crosses over. So that would have been a pretty good trade as well. Same thing over here. This one would have been a good sell, get out. This one wouldn't have been a good trade. This one would have lost a little bit. This one would have lost a little bit. So you see how, you know, the wins are good, the losses are smaller. So that's basically the strategy right now. Let me show you guys how you can set up your trade alerts. So to set up your buy sell signals where you get alerted from the chart, you're going to go into the settings for the CE, click on these 3 dots right here, click add alert on CE. And over here, you're going to do buy once bar close. So once a bar closes, that's when you're going to get notified. Okay. So it says, right, chandelier exit buy. Once you create that, you're going to come back in, right? You're going to come back in, add alert, You're going to do a sell once per bar close and then create. So this way you get the exit signals, I mean the sell signals, and you get the buy signals. And this way you get alerted and you don't have to watch the 1 minute scalping strategies. So when you get into TradingView, well, let's X out so I can show you guys how to set up your charts. Your chart is going to look like this, right? And we're gonna check this out on the SPY. So we're gonna add 3 indicators to start off with. So the first one we're gonna add is called the STC, and you're gonna pick this one, the STC indicator by Cheyenne KM. Okay, add that. We're gonna make some changes to it because I like my charts looking clean. Go into settings. I'm just gonna take off the plots because we're gonna be using this STC indicator in a much different way than normal. We just care about the green and the reds. I really don't care about the levels that it's at. All right. The next indicator that we're gonna choose, we're gonna add to TradingView is the moving average exponential moving average. We're gonna make a change to that as well. Go into settings. I'm gonna turn this into yellow. And I like it looking a little bit thicker. And then go into inputs and change the length from 9 to 200, because this is what we're going to use to give us the bigger trend of the market to see if it's, if the market's trending up or down. The last indicator that we're going to add to this is called the trend trader strategy. Trend trader strategy by H. Potter. All right, this is the one that we're gonna add. Guess what? Your charts are ready to go. So now that you've got all of these added, I'm just gonna pause the video for just 1 second because I'm about to give out another signal in my Patreon group. So hold on just a second. I'll be right back. All right, guys, I'm back. So now that we have the charts the way we want them to be, this is what the strategy is. And let me put some text up here so you guys can kind of follow along and take some notes too if you guys like. All right. So when you're going long on a long position, this is what you need to follow. And I'll show you guys some examples as well. The price action needs to be above the 200 EMA. Okay. So make sure if you're looking for long positions, the price action is above the 200 EMA. We're not going to look for short positions at this time. Okay. Just long positions, price action has to be above the 200 EMA. Second rule, you're going to wait for a dip and for the candles to turn red. So you're going to wait for the candles to turn red, and then you're going to wait for them to turn green again. Okay. When you're going to enter, candle need to be green and above the trend trader indicator. And then the fourth rule is the STC needs to be green. Okay. So now let me show you guys what I mean by this. Let's move the rules over here so you guys can still see them. All right. So basically you see this trend going up, right? Price action is above the 200 EMA. Great. It's all green. And this is one of the cool things about this trend trader strategy is even with the little blips, you'll still get green candles to kind of show you that it's still an uptrend market. Okay. So what's going to happen is this was great. If you missed out on this trade, no problem. You wait for the candles to turn red, right? Wait for the candles to turn red. And then when they turn green again and they close above the trend indicator, right? And the STC is green, that's when you do the buy signal. That's when you get into the trade. Okay. Like right here, same thing over here, right? Candles are red. They turn green, price actions above the trend trader strategy, right? And the STC is green as well. So you get in on here. So these two would be buy examples. All right. So let's go ahead and look at what do we do for stop loss and take profit on this, right? So on the long positions, because this is a 1 minute scalp, I like to put my stop loss and take profit to be pretty tight. So on here, I'm going to do stop loss at just below the recent swing low, and we're going to do a 1-to-1 ratio, okay, of take profit to stop loss. So this would have hit take profit right there, okay? In a situation like this, you'd get in right here, swing low, 1-to-1. This would have hit take profit in just a few minutes, right? Just like 4 minutes. This would have hit take profit at a 1-to-1 ratio. Now, if you guys are enjoying this video, hey, you know, if you guys are finding this useful, please hit that like button and write wow in the comments below. And while you're doing that, don't forget to subscribe to my YouTube channel and hit the bell so you don't miss out on any of my future videos to help you become a more profitable trader. And now we're going to take a look at the short positions. So let's go ahead and delete this. And now I think the SPY today had a very, it was like a prime example of the short positions that would have like killed it today. So here we go. So here are two different entries that we can take a look at. We're not going to mess with this because for shorts, we're looking for stuff that's below the 200 EMA. So we're not going to mess with any of this stuff right here. Okay. So now let's look at the rules for the short strategy to when you're trying to go short. There we go. Short position. Rule number 1, price action below 200 EMA. Okay. Rule number 2, wait for green candle. See how this is like, it is the opposite of what it was for the long position. Candles need to be red and below trend trader indicator. And then number 4, STC needs to be red. And that's why I really don't care where the, you know, what the plotting is over here, because we're just looking for the red or the green. So here's a couple of situations which are great. This right here, let's move this down, move this graph up. Trending down, you start getting green candles. Candle turns red, closes below the trend trader indicator. STC is red. You can get in right there, right at the second candle after it closes. Stop loss right above the swing high, recent swing high, and you do a 1-to-1 take profit to stop loss ratio. Come on. All right, 1.01 is fine. All right, so this would have hit take profit right there, right? If you missed out by a couple of minutes and this turned green again, right? This still qualifies. This still qualifies right here because now you saw green candle come up, red candle again, price action is below the 200 EMA, it is below the trend trader indicator, and STC is still red. So if this was your trigger candle, you get in on this trade, you're still doing the stop loss right above the last swing high, which was right there. And you do a 1 to 1.1 to 1-to-1, you still hit your take profit right there. And then you know what happened with the market today, it just tanked. So if you hung on to that trade because the trend indicator, the price action was still below the trend indicator and you hung on, you'd be printing cash right now. You'd be printing cash right now with this strategy if you just hung on, right? So a lot of take profit and stop losses, very, very dependent on each individual's trading style. So to maximize, of course, I like to keep moving my stop loss to break even. This way it's a trade, it's a free trade without any risk. And then you keep taking profits and you keep adjusting your trades. And that comes with some more experience. So, this was that. With these examples, I hope you guys learned, this basic strategy. It's super easy to follow. It's very profitable if you utilize properly. Okay. It'll have a couple of losses when the markets are completely flat, but when you look at the 200 EMA and you make sure that there's a little slope and you're going with the trend, it's super, super profitable. You don't need to force trades. You need to be patient to be able to take trades.